here with our book club today, and we are going over Rich Dad's Advisors books, or series Tax-Free Wealth. And we are going through, I already forgot what chapters you told me. I think it was chapter 21 through the end.
20 through the end.
20 through the end. So that is where we are and what we will be discussing today. And Natalie, our fearless leader, will take us away.
Excellent. Thank you, Laura. So I think these last couple chapters have kind of gotten into the nitty gritty, getting a little bit more specific into different opportunities for tax write-offs and opportunities to reduce or increase your wealth by reducing your taxes. And chapter 20 was one of those chapters where it focused heavily on stocks. And the chapter was stocks can lower your taxes too. Two key points I got there was there's definitely major tax benefits with stock purchasing and selling them. Definitely not in mutual, where that's the one where you get taxed even if you lose money. But then the other one was the amount of rules that you need to qualify for in order to be considered a full-time trader as a stock person. So, just playing in it isn't enough, it seems like. Did anyone else have any aha moments with this chapter or any of the perk or benefits that you saw that you could apply to yourself?
Yes, I decided I hate stocks and I'm not investing in them.
It's easy enough.
So I kind of like how so for instance, it kind of focuses on how to kind of utilize what you do have. So like the chapter before this one, I think it kind of talks about like, not necessarily keeping money in a retirement account. But then in this chapter, he kind of talks about, well, if you're going to do that, this is actually a really good strategy to kind of go about leveraging that strategy. So it was very interesting kind of, getting his take on like, what the usage for it is and kind of leveraging what you currently have.
That's true. Craig, what were your thoughts?
Well, yeah, no. So, I mean, I've been kind of going back and forth, and he kind of gave a little more detail as far as why he didn't like utilizing those accounts, and I guess the limited cases that he does like utilizing those accounts, in the sense of, and I think it's mostly based on taxes, right? So if you're day trading, you're paying ordinary income regardless, I guess. So his point is, okay, if you're paying ordinary income now or later, then let's make it later. But if you're just kind of, and so kind of using it for that type of strategy, I don't think he'd mind because there's no downside other than being able to kick the can down and you're not paying any more, as opposed to a situation where you're paying more. The idea of you're in a lower tax bracket, where you're not really in a lower tax bracket ever. You're in the same tax brackets, I guess. So for that type of, okay, now I know if I have this 401 or a non-Roth IRA, because I think he kind of took that out as a separate category out of there. But a traditional 401 or a traditional IRA, if you're doing anything with that, I think his impression was that you should do it yourself. You should set up a self-directed IRA and invest in rollover in something and invest in stocks on a day trading type mentality, if you will. And definitely seemed the impression is don't do mutual funds ever. Go find some stocks and go invest in some stocks. So it was nice that he kind of gave some clarity as far as, it's not the end of the world, but if you're using them, here's how you should use them. Don't just use them because that's what the world says to invest in. So I thought we finally had a little bit of guidance because I'm like, okay, at least I didn't kind of totally, screw the pooch, if you will, putting some money in there. It was just a matter of, okay, now that I have it, what should I do with it? And at least now, I guess to David, now you can start using your own 401, but only don't do it for real estate. That's for sure. Basically rollover Roths or IRAs, just buy stock and buy gold and silver bullion. I guess that was another good one with those accounts. But a little bit of guiding principle at least. So for a nice little clarity was nice.
Yeah. Well, good. So the next chapter, 21, was on commodities can be your tax friend. And this one definitely starts out focusing on the oil and gas tax benefits and not so much, just owning oil and gas stocks, but more being part of the exploratory team as well as the operations team. And that's where the actual benefits are at. But I know it caught some of your guys' eyes about how owning a farm can be a great opportunity for your tax wealth. And so I definitely made a note here about Laura and Craig and your guys' future endeavors. What got you excited here?
That I can own a farm and it's all tax free.
Everything. They pay you to do it. They pay you to lose money.
Yes, yes. So I'm not sure exactly how to work all through it because obviously it's just kind of a scratch the surface of what can be done. But I was very excited. I listened to that chapter twice.
Did you really?
I did. I did. I listened to it again this morning before we talked about it. I was like, oh, I think I'm going to go back and re-listen to this. It was interesting because a lot of our farming is actually not done here in the United States. And a lot of questions that kind of popped up in my mind was, I don't like, are they incentivizing us to do that to bring some of that production back here? Or is it more, just tax advantages that have always been there when there was more farming done here in the United States? Because I think most of our beef actually comes from China. Most of our corn comes from out of the United States. Cotton is another big one that's not done here in the United States.
I always thought that those tax incentives were essentially about like foreign trade. So the United States historically has always been at a net export, which isn't necessarily it doesn't contribute to our GDP. It actually pulls away from it, if anything. So from a tax perspective, I always assumed that's kind of why they were doing that. One thing I thought was interesting, I never really knew why people really got into like oil and gas. Like I kind of learned, like I kind of listened to this one. And he was kind of talking about, so for the first few years, you would set up your entity in a certain way, and then you would change it by the time you go about to, so like you benefit more going in without limited liability protection. But then later in the years, like as you start to pick up revenue, you essentially switch the strategy. I just found that one very interesting because it was like, that's the first time I've ever seen someone kind of go with, like he was kind of talking about the trade-off between like tax planning and asset protection. And that was the only time I've seen like tax planning essentially take precedence.
That's true. Yeah, he does talk about, don't lose money just to get a tax write-off. And you're right, this was kind of the first time where this is the key reason why you make these adjustments.
Right.
Well, good. Well, I'm excited for Laura and Craig for your guys' future farm and all these benefits you'll be able to see.
Well, I was just super excited because there's so many options, right? It's just another avenue, another option, another way to possibly save on taxes.
Mm-hmm. Well, and it makes reassurance too that you're choosing the right path or opportunity for your family to pursue.
Correct. I am firm in believing that I don't want Craig and I to do anything unless there is a solid financial reason for us to do so on the back end. And now I have multiple reasons to have not a llama farm.
Well, even stuff for Louisiana property. I mean, how do you define farm, right? I mean, all that. I mean, right now the farm, part of it, the way we have is the rental part is in an LLC, but the farm is in our trust, where maybe the farm should be in an LLC too, which is then owned by the trust, because then we should be, I don't know, all the fencing, all the stuff that we've been doing. I mean, that's all needs to be coming off. I mean, I guess, whoever's paying for it is one thing, but excavators, backhoes, and all that other fun stuff, that's just sitting on the property.
Oh yeah, all depreciation opportunities.
Right? I'm sure Dad never did that. I'm sure he doesn't have receipts either.
No, but I almost wonder if it would make sense. I didn't even think about that farm. I was thinking about not a llama.
I wonder if it would make sense to bring all of that up when we finally find the right person, because I think, again, there's a lot of, I just got off the phone with somebody, the person I was on the phone with before this, somebody who I had submitted our CPA to, and she was saying that, the CPA came in and said, okay, here's everything that your taxes need, or that's good for your taxes. And then after the IRS looked at it, they ended up with like an $8,000 liability. And so whatever was claimed on their taxes, she didn't even know why. Like, I was kind of educating her some. And I was like, well, if they gave you a bill, that means they didn't accept your taxes as is. That means they're taking some of that you claimed was not a liability, and they were making it a liability. Therefore, you made more than what you thought you made. And she's waited a whole year to buy a house because she can't get approved for a loan because she didn't make enough money. And I'm just wondering if what the government kicks back would have given them enough money to get in the house.
Yep. To
So
qualify.
it's just another eye-opening moment that we've got to have the right tax folks.
Mhm.
But I mean, in theory, potentially buying all that equipment from dad, seller finance it, and now we get a depreciation off our tax returns. I'm sure dad would never actually take any payments from us, but now, we never actually we bought them. So now we have an asset. We don't actually pay any debt because we don't have to pay, and dad can forgive it 12 grand a year without any issues in that sense. And now we're getting a depreciation as a offset off our passive income. For all the stuff that he's already taken. Great, well, buy from me, dad.
Right.
Bill of sale, done. We have a receipt. I don't know.
Sounds like lots of opportunities for a good tax advisor.
Yep.
All right, so that gets us into audits. Chapter 22 focused on Don't Fear the Reaper. Audit it was the title of that chapter. And this one focused heavily on definitely being prepared and every year buying that audit defense plan so that you always have it just in case. And then I thought what was interesting was how we call the corporate book, where almost like, if you're good, whatever, and you keep records in this book, everyone will take you serious. And it's almost a easy get out of jail card for an auditor, where if they see that you're that organized, they know that the rest of their process is going to be easy, and they may not look as deep. But definitely just put a lot of emphasis on why it's good to have a good tax team, as well as an audit plan each year, just in case that happens. I think, Laura, with our auditor or our tax advisor that we use today, they include that in their services. But just like any accountant, if they don't take a lot of risk, then they're definitely not taking a lot of risk by including that in their services, because they know they're not going to get audited because they're doing the minimum.
Correct. I agree. I'm terrified to be audited, though.
Yeah.
This chapter, I feel like, gave me a lot more confidence because I've never called it a corporate book. I kind of like that he called it something. Anytime I ask for the documentation to start putting together a corporate book, that's when clients start bitching. I'm not gonna lie. So I usually, a lot of the times I don't push back. But this almost kind of gives me essentially ammunition, because essentially you just come back and you're just like, the less documentation I have, the more risk I take on. So honestly, I'm probably just going to start charging you more, or you could just give me the documentation and we can keep the same price.
Yeah.
But it's like, having that corporate, because essentially, like, for instance, no one really likes to do an operating agreement or any kind of like partnership agreement or anything like that. So like sometimes they'll come to you and all they have is like an articles of incorporation, and I'll ask, like, where's the rest of the documentation, because that's what tells me how to do my job. Otherwise I have to make it up from scratch. Because if you look at those operating agreements, they tell you how to do the capital accounts, they tell you how to do the books, they tell you how to keep all that stuff. But then clients are like, oh no, I don't need that. I have my articles of organization or all these other things, but it's like, I kind of need the other stuff. But this just gives me a little bit more confidence, because a lot of the times that's why I wouldn't take a client, because I'm like, I don't know how to protect you if you get audited. I don't know enough about your business.
You just
So,
became high risk, or he did.
right,
rather.
right.
Well, and maybe that's
Charge him more for putting you under the gun of having to do more stuff, as well as have a nice little disclaimer, by the way. If you are giving me 10% of the puzzle, you have zero, I can't guarantee anything. I mean, you don't want to give it, great, that's fine and good, but I'm not liable for anything. I don't care what you call me.
Right.
You decline to, kind of the same thing when you do those waivers. Listen, you declined to give me corporate records, you declined to give me books, you declined to give me receipts. So I am doing this to the best of my ability, and you have no guarantee whatsoever that I've done a good job because I can't verify my work.
Right.
wow.
And because I can't sleep anymore, I'm charging you double.
And we can't drop clients,
Yeah.
especially if we have that documentation.
Right.
Yeah, we dropped this client for this reason. I wasn't doing it.
Yeah.
Well, good. Well, hopefully we never all get audited, so it's not a problem. Mute point for us. The next chapter is definitely not the surprise chapter, the choosing the right tax advisor and prepare. This is where he finally dropped his sales pitch of why we should use his company. No, I'm just kidding. Definitely felt that way. He never actually outright said it, but I loved his presentation on it of how to choose that right tax advisor and prepare, and how he said that the passion equals lower taxes. So if your tax advisor, that's all he talks about, then you know that you're on the right track and you got the right person. But if it's their biggest fear, then you're going to pay more. Most educated knowledge is the critical two aspects of a good tax advisor. And then kind of what I just said is, it doesn't matter what you get charged. If they charge you $100, but it costs you 70 grand more a year to do business because you're not getting the full value that they should be giving you. But if they charge you $1,000 and you're saving $70,000 a year, then you're really getting that benefit. And so that was an interesting perspective that, don't be so concerned about what your upfront cost is. It's what your cost is on the back end at the end of the year of how much are you keeping versus sending back to the company. Even one last thing that at the end of the chapter I thought was funny, where they actually offer any CPAs the opportunity to join their business. So at the end of the chapter, in case you're
So for me, this chapter was very eye-opening and very interesting, just because, to your point, I think a lot of times, even in our industry, people get caught up with the what is today, right? What is it costing me today, right? Is it, well, I'm paying 8% in interest, I don't want to pay that, I want to pay 5%. Well, what does it actually cost you to wait 2 years to buy that house?
right.
And right now, a $500,000 house waiting, it's a $200,000 expense to wait 2 years to buy that house. And I think it's the same concept with the taxes. It's your final cost. What is the overall? Take your blinders off and look at the big picture. And I think so many of us get caught up with looking at what they can only see through that little looking glass, instead of looking at the whole big picture, that I think that we tend to feel stifled or suffocated when we look at a $5,000 to $10,000 tax bill to our CPA or our advisors, but we're not looking at the whole thing. And then I really liked how he explained how to hire your tax person. And I felt I think validated in this chapter a little bit as to how I run my business as well, because, as I mentor people, as I talk to people, I'm always telling my folks, listen, it's not about you and how quickly you can sell the house. It's what is their pain? What is making them move? What's making them motivated? And we talk a lot about always asking more questions about them. And I hear back from my clients often about how they enjoy that, right? They feel like they're educated. They feel like they've gotten really good service. They feel like I go above and beyond. And it's not because I'm so much better than anybody else, but it's because I care, right? And I think as a consumer, we all put a lot of weight on that, even though we don't realize we put a lot of weight on it. And so it was good for twofold. One, it made me feel validated in the way I run my business. And obviously we read these books to help us grow our own businesses. But two, it was kind of an aha moment because I didn't realize I was doing it. But I think that how I move forward with all of my folks, all of my vendors. I'm going to start paying attention to how many questions they ask
Mhm.
as opposed to how much they sell their services.
Yep, good
So,
observation.
to piggyback off of that, I actually really love, like, he kind of went through a little checklist. I didn't write down the one as far as, like, what you would ask if you're hiring someone. I actually wrote down the one where, what do you ask your clients? Because sometimes I don't always know exactly what to ask. I just know what information I need, and I don't always know how to ask it. But the way he put that, like, questionnaire together, I was like, wow, okay, man, if somebody answered all of those questions, like, I'd probably be good for the first, like, 2 weeks before I needed to bug them for anything.
Wow.
So I don't know, it's just kind of like the way he put it together.
Well, and I do have the book, so if you want me to take a picture of any of these pages, let me know.
Okay. Look, luckily I got the book through
Oh, good.
like Kindle Scribe, so I can go in and get it if I need it. But I appreciate that.
Of course.
Did you get a scribe?
I did. Yeah. I saw that thing that you had, and then Lexi talked me into it. And I was like, well, Craig has something similar, and
I
he
have the
uses it
scribe. It's
his
exactly what I
business.
have.
Scribe.
Yeah, the scribe.
Oh, sweet. Yeah, we got the same thing. I saw yours and I was like, I gotta get one. So many notes in it now. I like it though.
So, Laura, you can make fun of him too for having a $500 piece of paper.
Look,
I will, but
for
it's a
it.
tax write-off. So I guess at this point can't make fun of either of you since you both use it for business.
As long as you both kept your receipt.
Oh, absolutely.
Yeah, but I'm along the same principle. I mean, I think it's, one, asking a question, I mean, not that I do it all the time, but, what can I do for you as opposed to here's what I'm going to do for you, right? I mean, I kind of, making sure that you understand the clients, what they're looking for as far as what they're coming to hear. Just because you can say, well, I'm an attorney or I'm a realtor and this is what I do. Well, okay, great. I mean, anybody can look up the definition, but here's kind of what I'm looking, here's why I called you. I mean, it's one thing if you're cold calling and reaching out to people, then okay, here's what I can do for you. But when you're kind of having that initial meeting, kind of having it, okay, what can I do for you? What are your goals? What are your things? And let's kind of put together something from based on my knowledge to how to fulfill your needs. Along and as well as the same thing, I think we talked about a conversation or a topic ago in regards to how you look at this stuff. And this is something that I've been kind of looking, kind of on my end that I've been talking about some of the high net worth and some of the complex trusts that I'm learning about to implement, which I'm going to be charging, once I kind of get my bearings on it, I'm going to be charging a good amount of money for these things potentially. I don't even like the way I'm characterizing it now that I'm charging anything. I'm going to commit to change myself from a counselor to, an investment person, right? Okay, I'm investing $25,000 in this plan to save myself money. It's not a cost, it's not an expense, it is an investment. So changing the understanding when clients are coming in, oh my gosh, a $20,000 tax bill. No. This is an investment in your tax life, right? It's not a bill, it's not an expense, it's not a cost. It is an investment. Okay. You want to make 80 grand a year? Well, sure. Okay, we'll invest 20 and you'll make 80 grand for the rest of perpetuity. Okay, I don't mind that. That's a good return, right? And kind of changing the whole conversation about it as opposed to a negative to a positive thing. Well, everybody wants to invest and make money. Great. Well, here's one way. You invest in your tax future, you invest in your legal future, invest in your real estate future, right? Okay, why wait till next year when the rates go down? You just invest now and make an extra 200 grand, right? Invest today, pay 20 grand in higher interest rate, but make an extra 180 in appreciation.
Well, I think that's a good point. My favorite quote is change the way you look at things and the things you look at change. And I think that's our objective through this whole thing is changing our verbiage to our clients and changing the way we look at our taxes. Because to your point, Craig, it's not a liability. It's truly an investment in your future and in your kids' future. I mean, when I look at the amount of taxes we have paid to put the kids through, these extracurriculars. I feel like I'm beating a dead horse because it's the one example it's a big example. We have $500,000 built into that. And I wish somebody would have changed the way I looked at my taxes, because I always thought, okay, that's not I don't think we spend too much on the kids. We just happen to have a lot of them. But if I would have changed the way I was looking at that money and the way it was being paid out, I mean, you and I would have, $500,000. That's a lot of money. That's
Yeah,
what,
Yeah,
about $150,000 we could still have, 200,000 that we would be sitting on that we're not.
Yeah, no, for sure, because it's very weird. People are like, oh, death and taxes, right? Oh yeah, I'll stroke a check for 30 grand to the IRS for my taxes for a year, but I won't pay my tax advisor 20,000 to save 30. Whoa. You're more willing to spend $30,000 to the government than $20,000 as an investment in yourself. And I gotta pay taxes. Well, no, you don't. And invest in your tax future. Invest 20 grand and save 30 in perpetuity. In perpetuity.
Yeah. Yeah, Laura, you have a lot of kids, but you could have had a lot of employees the last couple of years.
Oh, well, I could have. And I think about all the money that we paid out, over the course of all the kids' lifetimes in their extracurricular activities. It's about $5,000 a kid per year. And when that's $25,000 a year times a lot of years. I mean, the kids have all been in extracurricular.
On it, because even I'm like, a client, sent me an agreement that what they wanted me to review. I hear it on the, if you listen to the radio, it's all over the place. This ERC credit, I'm sure, David, you've heard it, the employee retention credit, right? If we'd have had 6 kids on our payroll, we could have been claiming 6 kids for ERCU credit. So let alone the write-offs and the reduction of taxes, the government's like, hey, you kept employees for during 2020, we'll pay you even more money. Right. I mean, so we lost out on that because we didn't, have proper planning. We didn't have the employees that we would have had. I didn't have an employee during 2020, unfortunately. I had one for like a month before he quit, but and then 1099s, I don't know if they count. But anyway, but during the time period, it's only from like 2019 through 2021 that the ERC credit, I think, is applicable for. So now I got employees, but it doesn't help me now. But we would have had kids as employees.
Absolutely.
And that would have been a nice little tax credit that would have been given us back.
Yeah.
I mean, Natalie, I would be interested in having you talk to a CPA that was very educated on all this, because it may benefit you to put, I don't know if you're incorporated or not yet. I don't know if you've created a business entity. But if you have, I just wonder if it wouldn't make sense for you to go in and put Lulu on some kind of income, reasonable for her age, even if it cost you money, because I wonder if that costing you money would still be a tax reduction on what you guys owe, because it's making you negative at the end of the year, right? When you pay your employee, if you don't have any money coming in, well, it's actually costing you money in business. And I wonder if that would be something that would be beneficial to Lulu for her sports.
Absolutely. I mean, because imagine her tax income rate at that level. Like you said, $5,000 a year. It's 12%, if that, or they get it all back. So it doesn't really matter. And, even if you do have to pay 12% on $5,000, it's better than 30 or 40%. So. Correct. And, if she was an employee of yours up until she's 18, the first 13,000 is tax free. And then after that, I think is where you go into that 12 or 13%. And then from there, if you're not making any money in, the Langle home group or whatever you call yourself, then she's nothing but a liability, which becomes an asset on your taxes. Oh, yep. I need to call someone soon for the end of the year.
You do, and it's twofold, right? So her swim team, her dance, all of those things become paid for with tax-free money. But at that point, she's now making income. So the one IRA that he does like, the Roth IRA, is something you could potentially start for her at 6 or 7, because now she has legal income. And when she hits the ripe old age of 65, if she's done nothing else for her retirement, she at least has that.
Yeah, that's a lot of years of growth.
Correct.
That's a good idea.
Correct.
Yep, time to go shopping for a CPA.
We are. Craig's got an interview with somebody. I think he scheduled something, and I'm about to schedule one with a financial advisor, a second one where somebody's made it past the first interview. We want to sit down with them, and I want to see who they recommend. But yeah, everybody start looking and then keep us all posted.
When you find a good one. Well, and I wonder too, if you went to this network where, from this book, he's, obviously recruiting people all over the country or world. And there might be one of them around here that might be just as good as
We are going to interview his group. That is on our list of humans.
Excellent. All right. Well, then that takes us to chapter 24. What are you going to do with all your extra money now that you have applied all your tax solutions to your wealth? It's very exciting. It's kind of a relief to know that you might actually have some. Here he kind of emphasized more around the compounding interest opportunities, the leverage, and then the velocity of how to grow that money year over year. Damon, did you have any additional insight on this last chapter of revenue or income growth?
I don't for the last one.
That's okay. I know it's a little different from the rest of the book where, it's not so much about taxes. It's about now you got all this extra money. And for most of us, it's like, well, I'll pay bills with that extra money. But yeah, he definitely talks about that leverage here. Craig, oh, I'm sorry, David.
The only thing I would say is, so one concept that it makes me think of is learning how to spend your money. So there's so many different things. So it's like, sure, we can kind of think about investments as far as, okay, if I spend this $5,000 now, somewhere down the line, I may get 7,500 back in total. But then on top of that, it's like also kind of knowing where to spend your dollars. So like, for instance, Craig kind of brought up a good point, and I have clients that ask me all the damn time, like, should I hire an employee or should I hire like 1099? Well, it depends on what you're using them for, really, and then it depends on if you have the funds for it. Honestly, going with an employee may make more sense because there are certain credits that you would get. So like we were talking about ERC earlier, that may be available for that year. But it's just kind of learning like how to spend your money. It's like, now that you have excess money, how do you spend it so that you don't lose it?
Mm-hmm. Yeah, almost like the last book where having too much money is also a problem.
Exactly.
Hey, I don't mean to cut everybody off, but I know we're probably short on time and I can't see a clock on my phone. How much time do we have before we get cut off? Just so we don't get
4 more minutes.
4 more minutes. Okay. Okay. Keep going. Sorry.
No, you're okay. I know that we always have that great question at the end of what will you take from this book and apply it to your life? And then I'm excited to hear if you guys picked up the next book.
Yeah. So the way I will apply it to my life is I am going to find the right person. I know that I don't know what I don't know. And I think hiring the right person, and I think that's a lot of the tone of a lot of these books, right? You're the professional, whether you're looking to grow your own team and you're looking to grow your business, or you're looking to, enhance your life to some degree, is hiring the right people is so important, no matter what the skill is that you're looking to cover. And so since I am not a CPA, I don't want to be a CPA. Mm-hmm. I'm going to go find someone who is amazing. My hope is David and Craig figure all this out, and that's who we hire. That's my goal. That's my takeaway is David and Craig need to get cracking on their ability to do liability asset planning, which is in my head Craig's problem, and the financials is David's.
That's good. You're learning how to delegate. That's a true leader.
Yeah. There you go.
I would say the one thing I would take away from this is, so honestly, he just kind of opened up my mind to a couple of different things that I can kind of look into that benefit smaller clients. So like there was several different things he kind of went through, and then some tips that I'll probably take away. But honestly, the biggest one I'll probably take away is just that little checklist that he said, as far as like what a CPA usually will ask. I'll probably borrow that just so and as I kind of for like audit clients, not just for like tax clients, bookkeeping clients, like even for the IT audit and the financial audit.
Well, I love how Craig took the idea of taking those questions and applying them to other industries too. And, lawyer or real estate, and all great questions for just change out the words.
Right.
Craig, how about you? What's your takeaway? Oh, the whole book. What's your takeaway from the whole book? Anything you're gonna apply to your life?
Well, the taxes are not expenses. The taxes and tax strategies are investments in your future. I mean, that's what I took it. I mean, and it really, totally changes my understanding and feeling about taxes. I mean, when I first, Laura and I first got married, like I hated taxes. Like it stresses me hell out. I never filed on time. It was always late. It was always that. I mean, it was the stressor from, let's say I filed June 1st. So from June 2nd and through the following June 1st, I was always stressed. Like, oh shit, it's coming up. I got to worry about it next year. And now it's having somebody do my books made things a lot easier in that sense. But now you've been taking the fact that, okay, learn how to handle your financial life, which is impossible not to, or should be impossible not to, at least when living in the United States with a such a commercial economy and a commercial society, capitalistic society. Investing in your tax understanding is just as important as investing in your 401, if not more, because especially obviously the 401 sucks with this guy, but it's just as important, and it really changes your understanding and your feeling about taxes. It's always been so negative in my head, always negative. And now it's okay. There's not a negative thing. There's a lot of positive things. You just got to find it.